Hello traders and welcome to another video review. Today is Monday, the beginning of the new week, March 6, 2023. Let's take a look what is going on the financial markets today. As you can see, some data had been released overnight. One of the important ones were from the Switzerland CPI of the Switzerland. Oh, it's about to be released. It's not released yet. 0.6% was the previous reading. 0.4% is the forecast. We will see in about 1 hour what is the situation here. IHS market construction PMI data from the Germany are scheduled for release at 9:30. Construction PMI, one of the most important data for today. This data is from the UK, are scheduled for release at 10:30. The previous reading for the month of the February was 48.4, and the forecast was 49.1. So improvement is expected from the construction PMI in the UK. Retail sales data from the Eurozone are scheduled for release at 11 o'clock. Retail sales supposed to improve from minus 2.7% to 1%. There is a speech from ECB Lane at 11 o'clock, and then during the New York session we got the factory orders from the US scheduled for release at 4 o'clock, and the Ivey PMI data from Canada scheduled for release at 4 o'clock as well. This data are expected to be to decrease from 60.1 to 55.9 points at the end of the day. At 5 o'clock p.m. German Buba Balz is giving a speech. So kind of a busy day for Monday on the financial market, so it looks like we might expect some sort of the market movements. Nevertheless, as usual, let's find out what is going on majors, and we are going to start with euro-dollar. Euro-dollar for our chart looks like it doesn't want to move any lower, because right now we are still moving above this short-term trend line support. Orange line here is showing us that the market is testing the 50 periods moving average, 100% 100 periods moving average, then bounces again, breaks again above the 50 periods, then above the 100 periods moving average, and then of course we have another cap around the level of, let's say, local high is 1.0651. So right now the market is moving to the upside. Momentum is kind of a positive 55 points. Nevertheless, it's not a strong momentum, and it looks like the market doesn't know where it wants to go really, because recently this very nice movement to the upside was made only in 3 waves, unfortunately, only in 3 waves. So let me just point out this last local high, 1.0692, blue line. As you can see on the left, we still have some resistances, and every time the price was touching the 50 periods moving averages, it was rejected. It was rejected and keeps making lower lows. So right now the bulls are trying to regain some ground. They're trying to regain some momentum. Nevertheless, even with that engagement here, they are not able to rally any higher, and it looks like sooner or later this market might move lower. Technical supports, intraday technical supports on the euro dollar are 1.0589, 1.0577. There is one more, of course, 1.0566, and the last one is located at the level of 1.0534. So this is the situation on the euro dollar. It doesn't want to it doesn't know where it wants to go yet, so maybe during the day after the data are released, market participants will help bears or bulls to make up their minds. Screenshot, and we go to the British pound. The British pound situation is kind of similar to the euro dollar, because we still have this technical supports here. There are still, this technical support is still not really violated. If we zoom in, we can see that the market is kind of moving inside of a very flattenish zone located between the technical support and technical resistance. So whereas the technical resistance is around here, so that's the, let's say, red level, and market goes up and down inside of this zone. Sometimes it's breaking above the moving averages, sometimes it's moving below them again. Nevertheless, if you take a look here, you will notice that we are moving faster to the downside than we're rising towards one of the technical resistances. Right now, the 50 and 100 periods moving averages on a 4-hour chart are very close to each other, and the market is trading between this trend line. So that's another clue of what is going on in this market. Basically, this market is trendless. It doesn't know where it wants to go, so please be careful, because if the market is trendless, it means that it can spike up or down very aggressively when the correct movement in a correct direction is triggered. Okay, so this is the situation on the British pound. We are waiting for a decisive breakout, and we are waiting for this market to give us a clue where it wants to go next. There are some data from Canada, so let's take a look at the US dollar to the Canadian dollar. And here the situation is interesting as well. We got this level here that clearly rejects any breakout. As you can see here, 1.3664, that's the high from the 24th of the February. So let's take a look a little bit closer what is going on here. As you can see, we got that classical distribution pattern on the US dollar to the Canadian dollar. We are trying to move higher. Nevertheless, there is, every time the market moves up, it's being dragged to the downside, and it looks like the best doesn't really want bulls to break anywhere above this local high at 1.3664. The downside itself is limited as well, because the bears on the other hand are still trying to move higher and higher. We got the technical support at 1.3536. Nevertheless, one more technical support is still present on this market, and this technical support is around the level of 1.3556. so this market is locked in that zone, inside of that zone as well, trading just above the 50 periods moving average, away from the 100 periods moving average, so the trend remains up. Nevertheless, the momentum, as you can see here, let me just point it out by the arrow, the momentum here remains very weak, and it is decreasing. So some sort of the negative divergence is being played out by the market participants, and it looks like the small distribution is taking place just above the 1.3650 level. So please be really careful when trading the long positions on the US dollar to the Canadian dollar, because it looks like the bears might attack a little bit more aggressively here. What is else to take a look at is, of course, the situation of the US dollar to the Japanese yen, because that's another major market. Let's just take a look here what is going on, and we got very interesting patterns, candlestick patterns on a 4-hour chart. As you can see, we got the harami pattern here, we got the engulfing, we got the pin bar, we got engulfing, and the pin bars are going from are bouncing from this slide zone here, 1.3524, which is just above the 50 periods moving average. So it looks like the bulls are defending this level. There is still quite of a room towards 100 periods moving average, because it's on the 134.58, so that's over 100 pips lower. Nevertheless, it looks like the local high at 137.10 was made during the bearish engulfing pattern. So if you take a look here, you can clearly see the momentum is decreasing, the market is going up, the momentum is decreasing, which means some kind of a negative divergence is being played, or some kind of a partial distribution is taking place on the US dollar to the Japanese yen 4-hour chart. So the local high, let's just put it on the chart. The local high is 137.10, and since then we're just making like a reversal from this level. 1, 2, 3, 4, 5 looks kind of impulsive. This reversal looks kind of impulsive, which is even worse for the bulls. Any violation of 135.23, this blue technical support might result in a further decrease towards 100 periods moving average or even below. So please be very careful here as well. Please stay focused, because we might see some sort of the bounce from the technical support and then breakout to the downside as the momentum is vanishing from the euro, from the US dollar to the Japanese yen market. That was the quick review of the majors on the Monday morning. Thank you very much for watching, and I hope I see you guys next time. So take care and bye bye.